Hey guys, it is Julie here with TipRanks. Today we're taking a look at two companies that big investors are buying. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two companies that have some pretty big named investors scooping up their stock. One of those being one of the world's largest asset managers, BlackRock. They have over $9.4 trillion in assets under management. And the other being Cathie Wood's ARK Invest, known for investing in disruptive companies. So we're going to take a look at these two companies, what it is that they do, what size of position these two investors have taken, and of course what Wall Street analysts are predicting for the stock's future. Of course, you can check out these two companies over on TipRanks.com or by downloading the TipRanks mobile app where you can access all of your favorite research tools on the go. Links for the mobile app will be in the description down below. Now let's get right into these two stocks. Today we are starting off with UiPath. Their stock trades under the ticker PATH, currently priced at $16.49 per share. They've seen year-to-date growth of 34%, but are down 9.7% in the last 3 months. They do currently score a 10 out of 10 on the TipRanks Smart Score and have seen some increased hedge fund activity this past quarter. UiPath is a leading global provider of robotic process automation, or RPA, software and services. Established back in 2005, UiPath has emerged as a major player in the automation tech sector, assisting organizations in automating their repetitive, rule-based tasks and processes. Their platform enables businesses to create, manage, and deploy software robots that replicate human interactions with digital systems and applications. They have tools for process automation, document understanding, data extraction, and analytics. UiPath has been experiencing some steady growth, as reflected in their latest earnings report that came out about a month ago on September 6th. For their second quarter, the company reported earnings per share of 9 cents, coming in well ahead of analyst expectations and a big increase from the previous year's loss of 2 cents per share. For revenue, they reported $287 million, which was an increase of 19% year over year. Their co-chief executive said that they are energized by the excitement around their continuous investments in AI, which are driving business outcomes for their customers. Looking to the second half of the year, momentum is building across the business as customers recognize the need for efficiency in the current operating environment. As for our big name investors, Cathie Wood's ARK Invest is actually the largest shareholder of UiPath. They own over 48,280,000 shares of UiPath, commanding a market value of about $782 million. And BlackRock also holds a substantial portion of UiPath with over 23,300,000 shares worth about $379 million. The stock does currently come in as a moderate buy with 14 current ratings from Wall Street. That breaks down to 6 buy ratings and 8 holds, with an average price target just shy of $20 per share. That would be an upside potential of about 20.5% from current prices. Looking down below at our most recent ratings from the past week, we do mostly have holds. On the low end, one with a slight downside of nearly 3%, another hold with an upside of 15%, and going back a bit further, we have some high-end price targets with buy ratings up to 39% upside. And the second company we're taking a look at today is Teradyne. Their stock trades under the ticker TER, currently priced at $96 per share. They've seen growth of 33% this past year and 12% year to date, but have cooled off down 17.5% in the last 3 months. They do currently score an 8 out of 10 on the TipRanks Smart Score with some bullish blogger sentiment. Also in the tech sector, Teradyne specializes in industrial automation. They're focused on the field of automated test equipment, or ATE. Founded back in 1960, Teradyne has played a big role in advancing technology by providing innovative solutions for testing and optimizing complex electronic systems. Their extensive product portfolio includes a wide range of ATE solutions, such as semiconductor test equipment, printed circuit board test systems, and industrial automation solutions for applications in industries like automotive, telecommunications, and aerospace. They'll be sharing their next earnings report here soon, next week on October 25th. In their Q2 report back in July, they did see some year-over-year declines. However, they did beat on both earnings and revenue. For their Q3, analysts will be looking for earnings per share of 73 cents. In their Q2, they reported earnings per share of 79 cents, coming in 13 cents ahead of analyst expectations. They had revenue of $684 million, which did exceed expectations but was down 19% year over year. Management noted that they delivered revenue at the high end of their guidance range with higher semiconductor test shipments, which more than offset their weaker robotics demand in the quarter, while profits exceeded plan on higher gross margins. As they enter Q3, test demand for their memory devices remains strong. As for our big name investors, BlackRock is actually the second largest shareholder of Teradyne, holding 13,900,000 shares, and at current values, that's worth about $1.32 billion. Cathie Wood's ARK Invest recently increased their holdings in the company to about 1.2 million shares, worth about $111 million. Seeing how Wall Street weighs in on the stock, we have another moderate buy with 14 current analyst ratings. The Teradyne stock brings in 8 buy ratings, 5 holds, and 1 sell. With an average price target of $120, that would be a growth potential of nearly 25% from current prices. Down below, we can see our most recent ratings from the past month range from a hold with an upside of 14% to a buy with an upside of 30%. The rest are all 3 months old from that last earnings report, ranging from 18 to 37%, 43% upside. So there we have 2 companies that have been bought by some pretty big name investors, also coming in as moderate buys among Wall Street. Let me know your thoughts on these 2 companies in the comments down below and what other big name investors you like to keep an eye on. I always appreciate hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock, just providing some insight and entertainment, so please make sure you're always doing your own research and due diligence. Thank you guys for watching. Have a wonderful day, and I'll see you back here next time.